Hey, welcome back to the channel, Full Invested Phi Labs. I'm sure everyone is mostly back to work this week and back on the daily grind. Personally for me, it was a bit of a rough, slow week for me. Like this week passed by really slow. A lot of craziness to deal with at work, and then also just again more layoff news and studio closures that are happening in the games industry, which is like just honestly a good reminder of like why I'm pursuing this strategy with my portfolio to help secure myself from layoffs. Having this monthly income coming in is going to help secure against that if the worst happens. And then also just to hit early retirement so that I can kind of do whatever I want when I want and not have slow weeks like this week coming back from a good holiday break. Probably could have used a couple more weeks. But today we'll be going over portfolio updates from week 33 since I started investing my full paycheck at the end of May 2025. I'll go over also any news related to the portfolio and also bring back the finance video of the week after a little pause the last couple of weeks. So before we get started, of course, the usual disclaimer. This video is for entertainment and educational purposes only. I'm not a financial advisor and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Investing always carries risk, especially when using margin, and you can potentially lose money. Don't copy what I'm investing blindly without understanding the risks and doing your own due diligence. No returns are guaranteed. Let's just get started here. So as usual, here's a refresher of my fully invested flowchart. I invest 100% of my income, at least 10.8K every month, into growth and high yield ETFs. So I just keep buying assets every month. And I've stopped using traditional banking to live entirely out of my Robinhood brokerage account. I use cheap margin of 4.5% to bridge the gap between my bills and my dividends and my monthly dividends. And the goal is to never sell a share, forever compound, and have my monthly dividends eventually exceed my monthly expenses. So if you want an in-depth breakdown of this, check out the video at the top right here where I go super in depth to this whole chart. So if we go over to Robinhood and kind of look at my portfolio where it's at. So these are all my real numbers, like nothing hidden, all about being transparent on this channel. And yeah, so right now, even with the after hours sitting at $155,098. And yeah, it's been a good start to the year, which has been nice. So today I'm up 0.88% or $1,349. Yeah, this includes some dividends that came in this week too from the single stock yield max ones. On the week, I'm up 2.42% or $30,659. On the month, I'm still down, but kind of gained back a lot of that ground that I lost in December. 3 months still down as well, or just 1% now. So closing the gap. And year to date, doing really good. So strong start to the year. And yeah, we'll see in Snowball too how I'm comparing to the S&P in a bit. But on the year, since I transferred everything over to Robinhood, I'm up 7.79% or $11,206. So yeah, that's how it's looking in Robinhood. And now let's just take a deeper view in my portfolio spreadsheet here. So yeah, this week with the market kind of like pushing up, I actually pushed past the $300,000 mark, which is great for the portfolio. This is the gross value of my portfolio, right? So I have $301,564 of gross value. So basically all these assets combined basically add up to this number. With that, I'm using 145K of margin. So that's what gets drawn from when I'm paying my bills and things like that. And yeah, and then I also have some realized gains and losses from last year, which I'm kind of tracking here now. I kind of note all of them here. You can kind of see. And yeah, so with the net value here, because the after hour stuff in Robinhood is a bit more updated, but at the end of the day, this is where I ended at 156,479. And actually, I might have forgotten to I'll do this right now because those dividends came in and I actually haven't had a chance to pull them in yet. So I'll just do that here right now while we're live. And yeah, so a couple of things that happened today. So my dividends came in, and then also I paid a couple of bills, paid my Fidelity credit card, and then also had my internet bill come in. So transferred money over to my spending account to get that paid. So like, yeah, if we open my spending here, you can kind of see, these bills that came in. So I basically transferred this money for bills to come in. So that's gonna get drawn. So yeah, but if we look at the portfolio spreadsheet though, yeah, this is where stuff is looking. If we look at the total return column, so mostly still green. Costco gained a lot of ground this week. I think last week it was down like nearly 9-10%, and now it's only down 1.91% with total returns. UPay is kind of sticking steady at minus 11%. Same for Alti, minus 10.25%. MSTY still down. It gained a bit of ground this week, but also, so it gained a bit of ground because it was not removed from the MSCI index, but then there was some news after that came through that made it drop this week, today too. So we'll go over that. That's part of the portfolio news for later. But yeah, that's how all the numbers are looking between all the different holdings there. So for the high yield ETFs, apart from these three, everything's like mostly green and holding up pretty nicely as far as total returns. Yeah, as far as the cumulative numbers between everything, I'm just going to read off basically like the final line here. So including my realized gains as well. So the portfolio is up in total returns $50,407 or 15.59%. If you count that against the margin value, basically this value, right? So this is off the gross value. This percentage is off the margin value. So that's up 32.54%. If you count the unrealized gains and also the realized gains, like that's actually more like minus $12,763 or minus 3.95% for the whole portfolio. Or if you count it against the margin, minus 8.24%. So obviously a lot of the unrealized stuff that's getting dragged down is from the high yield ETF side here. But if you factor in total return, I'm like way in the green there. So you can kind of see the big difference there between the two. And that's why I kind of like showing both. You can kind of really see like you have to factor in the total return when you're looking at high yield ETF stuff, really. So yeah, how stuff breaks down as far as like between growth and high yield income. So I have like 165.9K in growth right now. So basically like all these assets, right? And then $135,611 in high yield income assets. So all these guys. So roughly that breaks down to 55% in growth and just under 45% for high yield income. So that kind of makes up the total 301K, right? And yeah, as far as the margin health, if we kind of take a peek here, so you can kind of see here, my margin buffer is sitting pretty healthy at 78K, and I'd have to, my portfolio, this net value and gross value would basically have to fall to 76.8K to trigger a margin call. So have a healthy buffer here. So 25.87% on the gross portfolio value. This would have to drop that amount basically to be the equivalent of 50.36% of a drop on this value. So yeah, buying power is sitting at $64,247 and have $32,000 essentially of cash available for withdrawal. So this cash I could take out of the portfolio. Like this number is basically the difference between the margin total, the max I can margin, and the margin used. So that's, I try to keep a healthy buffer between this just so I can keep my margin buffer healthy and keep everything healthy as far as like margin, right? So my equity is sitting at like 51.37% here. And yeah, as far as the monthly dividends, this hasn't moved too much because I haven't done too much investing this week. There was a little buy of gold and a little buy of GOW this week. So this moved a tiny bit, a couple of dollars. But right now I'm estimating like roughly $5,163 a month or a 45 roughly percent yield. And that's basically only on the assets that are invested into high yield income, right? So basically this 135K number. So yeah, that's why this one is kind of coming in at 45% here. If I go off the full portfolio value, like the full 300K here, that's actually closer to that 21.33%. So I have a lot of numbers, a lot of stuff that I want to track to just kind of see where stuff is at. All makes sense in my head. I hope it does in yours. But yeah, I know I bounce around with all that. But yeah, that's how it's looking on the portfolio here. Yeah, if we pop over to Snowball to kind of get a different view of all that. So yeah, a lot of similar numbers there. You can kind of see, yeah, what their passive income sitting at 17.73% because they calculate the dividend yields a bit different. They just go off the last payment and kind of project that out. And mine's like more based on like an average over the last 4 weeks. But yeah, as far as the different buckets that are in the portfolio, you can kind of see how stuff is doing. Like the ultra high yielders are definitely down. Like those are the ones that have eroded the most, right? You can kind of see here it's down 7.94%. This is with dividends received included as well too. Single stocks are holding up good, and so a lot of capital gain loss, but then also a lot of dividends received. So yeah, that's still in the positive here. The anchors are holding up very well. It's a lot of dividends received, some decent capital gains even that are positive. So that's up 21.5%. My little hedge in gold here. My growth and dividend growth anchors are holding up great. So yeah, that's up 13.67%. The single stocks are just kind of killing it because this is like, yeah, Apple and Microsoft that are big players here and that I've held the longest in my portfolio. So those are still doing good, even with how much I've trimmed this last year. So that's how that's looking. If we go to the growth side of things, we can kind of take a look at the chart here and compare it to the S&P of like how I'm doing. So let me actually just change this to, what's it called? To just this week, really, just so we have like a 1 week view of everything. So we have a 1 week view of things. So this week, yeah, I beat the S&P, which is great. Nearly almost doubled it. Was up 2.64% or $3,989. And the S&P was up $2,408 or 1.6%. If we go over the month, that I'm still down, right? I'm kind of still gaining background on that and gaining quickly. So you can kind of see there. On the 3 months, the S&P is like just handily beating me just because of like, yeah, that drawdown that started in October and November and continued in December. And then on the 6 months, slowly gaining background there, going back up. So yeah, just fell sharply there, but like recovering a lot faster. And then year to date, like I was mentioning, it started with like a good beginning of the year. So yeah, I'm up 3.56% or $5,318, and the S&P's up 1.78% or $2,600. And if we go over the year, I'm just eking out a little bit of a gain there over the S&P. So I'm up 18.09% or $23,736, or the S&P's up 16.88% or 23K. So yeah, that's how that's looking as far as the portfolio performance against the S&P. Like always, my goal generally with the portfolio, honestly, is to not like get QQQ level numbers. It's to actually just match the S&P. That's like my goal really, because given that I have a lot of high yield stuff, like if I'm able to generate all the income that I am plus match the S&P, for me, that'd be pretty great. And yeah, now one of my new favorite sections in Snowball that I discovered after the year in review is this section over here. So just a heat map of how the positions have been performing so far. So year to date, you can kind of see like the heat map of where things are. One nice surprise in all this is SCHD, like kind of killing it at the beginning of the year. Yeah, so that's up 4.1%, which has been great to see. So yeah, and I'm always going to rely on SCHD as far as like on tech downturn years to like really kind of foot the bill there, to drop less and to be more safe. Like, yes, SEC has never had like a massive drawdown. I think like someone posted a chart the other day on Twitter where it's like the most drawdown it's had in the last like 10, 15 years was like 5%. Yeah, when you compare that to QQQ, that's dropped like 20, 30% in some years. So that's why I have SHD. I know a lot of people hate on it sometimes because of its underperformance over the last few years, but like, yeah, I'm not in it so it overperforms. It's just so it's a bit more stable compared to the rest of the portfolio. So it's a great anchor. And yes, we check like the others. SPMO not doing so hot, especially compared to VU as well. Just up 0.6%. XPay up 1.7% in the year. QQM up 2%. QPay actually hold up on the year, especially with dividends received. YMAX as well. NVIDIA kind of just flat. Ulti, look at that. Ulti with dividends received and so far, strong beginning of the year, up 3%. So VU's up, Costco's up big, like I mentioned, so up 7.3% since the beginning of the year. BTCI and MSTY have had a good start too. Apple and Microsoft, like really starting off the year pretty bad as far as like the Mag 7 goes. They're probably the weakest performers there. Google's up nicely, Meta's down. I forget what news is kind of dragging them down at the beginning of the year. I saw they had some sort of nuclear deal that happened for their AI data centers, but yeah, haven't quite followed there. Yeah, Reddit just keeps tearing it up. Take-Two was down this week because there was some fake rumors as far as like potential further delays for GTA 6. And that was actually totally fabricated by whoever. I've been noticing there's a lot of fake AI news that people are posting, especially in the game space. But that somehow affected the stock going down because people believed it and passed it around all over Reddit and everything. But yeah, this is a heat map for year to date. And like, even if we go from like this week, if we want to, right, to just kind of really narrow down, you can kind of really see how stuff breaks down. I'm not going to go over them all again, but you can kind of see like Costco did amazing. Yeah, Google, Reddit did amazing this week. And yeah, Apple is just dropping like a rock this week. But yeah, love this little heat map, and just that it's kind of contained to my portfolios. I think I'll be showing this a lot more regularly now because yeah, this is definitely my new favorite part of Snowball that I discovered. Yeah, and then as far as dividends go, if we pop over to the calendar, can kind of see what I received this week. So good week for dividends. Like there's a bit of an error here. XPay is actually paying out next week, but I think they messed up the dates here that they're showing it for this week. So ignore XPay. So yeah, this is more like 300 or a little bit less than 300, 250 this on today, $317 on Thursday, $190 that came out on Wednesday from WPay, a little GOW payment on Tuesday of $16. And yeah, and then after this is like carryover from the previous week because of New Year's and everything, but like Hui, MSTY, and NVIDIA paid as well, $305. So good week overall. It's kind of trending that like this month we'll get 4.6K, so a little bit lower than the last few months. So really, you can kind of see the effect of the dip that's happened over the last 2 months, like how that's affecting payouts, right? So yeah, just something to keep in mind as dips happen, right? Like the payments will fluctuate a lot. And yeah, also just good to know that like, yeah, as I'm kind of investing, this is not maybe growing as fast as I'm hoping. So I need to adjust my projections. But yeah, we'll see how this goes this year as stuff trends up, hopefully. And yeah, and then as far as next week's dividends are coming up, and yeah, we'll keep going week by week as the month goes by. One thing I want to deep dive on is actually on the dividends portions here. So we can kind of take a look at like the yield on cost on everything, right? So that's the thing that's important to keep in mind. So you can kind of see how, like, for example, like MSTY's current yield is like 65% on its current payment, but because of my high average cost per share, my yield on cost is actually pretty low right now, 15%. So this is like pretty hard to see, where you can kind of see like how much the yield has dropped from MSTY, from like how much it's dropped, right? Alti's actually holding up. Like it's its current payment, last payment was 65% of its current price, but my yield on cost is 44%. So 44% as far as like ultra yielders though is still pretty strong. Like despite the dip from where it's at, like still pretty happy with that. Hui from 60% down to 40%. We pay from 50% down to 40%. So still pretty high. Like if it's above 40%, I'm still pretty happy. So as far as like that ultra yielder category, right? Like I want to have a little bit of a balance in the portfolio, right? Of like the ultra yielders, single stocks, and the anchors, right? And this year I really want to build up the anchors here. So I want this to be the biggest slice out of the high yield buckets here. So we'll be really pushing this up. But yeah, you can kind of see how stuff is affected, right? And what yield erodes and things like that. So yeah, this is NVIDIA's. Like its payment this week was 38% and yield on cost is 25 with my shares. BTCI was 26% and now it's 18.5% for my yield on cost, given the Bitcoin has had. XPay has been pretty steady, staying at 20%, and my yield on cost is actually higher at 21% because it's actually gone up. XPay has done amazing. I think I'll be contributing a lot more to this year because it's just like a almost nice, almost guaranteed 20%, which is great. That's like higher than TDAX even, which is at like 17, 18%. And speaking of which, that's holding up nicely. QQQI is holding up nicely here. My gold hedge is holding up nicely. I'm slowly contributing to that, $200 every month. SCHD, you can kind of see the yield on cost growing because it's a dividend growth stock. And yeah, these guys, just the tiny guys over here, actual normal stocks yields. So yeah, Microsoft have a good yield on cost on that. Apple as well. So yeah, love all the stats that you can get on Snowball for all that good stuff, right? You kind of really see what you received, your future payments, how that's growing. Yeah, like my dividends over the last year. That's pretty much the portfolio. Like, yeah, a lot of numbers to go through. But yeah, as far as news this week, there's a lot that like affected the portfolio. So if we take a look at MSCI's move here this week. So there was good news this week as far as like MSCI not removing MicroStrategy from their indexes, which would have like cut off a lot of passive investments from like 401ks and things like that. But so there was a bit of a jump on that. But then I saw this article just today of how, so they did not remove them from the index, but they did put some caps on them. So if we take a look at this tweet here, actually, this was an interesting one. So basically there was like a dip. There was a good gains this week. And then today there was like a pretty big dip, like 5% when we look at the dip over here, right? So I think this was on this news basically. So yeah, it looks like they didn't remove them from the MSCI indexes, but they added a new rule on them. So like if MSTR issues any new shares, they're not going to add those shares to the index. So those are not going to be like passively bought by any funds and things like that. So that's kind of putting a bit of a cap on them in a way. So didn't remove them, but then kind of put a cap on them. So that's a bit interesting. But yeah, I think that's the reason for the moves there for MSTR and MSTY this week. As far as like Bitcoin, there's a couple things that popped up on my radar this week. So if we pop over to Discord here, this popped up on my Twitter here as far as like notable trades that popped up. Like this one senator or maybe someone from the House, Byron Donalds, bought 100K of Bitcoin. So that was pretty notable because that was his first ever buy. And he sits on this specific committee that has a little bit of a conflict of interest when you consider that. Yeah, and this is the Financial Services Subcommittee on Digital Assets. So yeah, interesting thing here that happened with Bitcoin. So posted that on the Discord for people. And then also on January 15th, looks like there's like a little catalyst to kind of pay attention to here. So yeah, there's something going through the Senate as far as like the crypto clarity bill. So it looks like they're just trying to just clarify a lot of the regulations around crypto on the government side. So it'll be interesting to see how that goes and how that moves through the Senate and how that'll affect Bitcoin down the line. And yeah, and then also TappAlpha also released 2 new funds. So they're basically leveraged versions of TSPY and TDAX. So there's TDAX over here, and then also TSYX is their TSPY. So they're applying like light leverage, 30% on top of TSPY and TDAX, but their same core strategy of like actually holding the underlying and doing 0 DTE calls to generate little bits of premium every day. So yeah, and they partner with Total Capital with this, which is interesting. Some people on the Discord, I'm not sure if they were mixing up someone else, but yeah, Foxhound mentioned something about Total Capital where they're not sure about their funds as a fund issuer. So something to look out for. I didn't have a chance to look into this more deeply, but definitely something to look out for. But given TappAlpha's track record, I'm hopeful. I'm going to keep an eye on these, and I wouldn't buy these right away just because like the margin maintenance on them is going to be 100% for the next 30 days on Robinhood since they're new. So yeah, like if we take a peek here. So anytime there's a new ETF that's added, right, the margin maintenance is going to be 100% for at least 30 days is what I've noticed. And then after 30 days it goes down to what it should be. So like this would maybe drop to 30% if I had to guess instead of 25% just because it's leverage. So yeah, keeping an eye on that. Just because like one thing I do like from these is that it is weekly since TDAX is like monthly. So yeah, I'll be kind of following this closely, seeing how it performs and see if it's worth to add in the portfolio as part of the anchors. And also it'll be kind of interesting to compare this to Neos's boosted SPY-I, QQQI, and BTCI that's coming out pretty shortly here. And they're using a little bit more leverage at 50% from what I understand. So yeah, it will be interesting to compare and contrast these two and how they do. And if both are worth adding to the portfolio or only one of them. So yeah, keep an eye on that. And then as far as last bit of news for the channel. So as of today, actually one strike finally came off the channel. So yeah, so now I'm down to like just one strike left, and that's going to expire on January 24th, 2026. So in a couple of weeks here. And yeah, honestly, really looking forward to it. And glad that like one strike is off from one of the older videos. And yeah, and then after on January 2024, I keep saying 2024, on January 24th, I'll be back to posting on the main channel. And as a reminder, I'll be doing, any retirement account content that's going to be on this channel, Full Invested Fi Labs. And then any main taxable brokerage content, so all my growth and high yield ETFs portfolio stuff, that's all going to be on the main channel. So yeah, kind of trying to keep those two separate because I know there's like people have different interests in those. So yeah, right now it's in the messy middle where I'm kind of posting both on the labs channel as I figure stuff out. But yeah, after January 24th, that's all going to separate, and hopefully, fingers crossed, there's no more strikes and I can kind of keep things clean and safe for everything. So yeah, we'll kind of keep those two separate. So yeah, that's all the news for the portfolio this week. Actually quite a bit between all the different things. And yeah, as usual for the portfolio update, where I wanted to end was the finance video of the week. And yeah, this was like a good little podcast, or an hour, 22-minute podcast interview on the deep end with Better Call Paul. So this is like Ari and Ryan's podcast. They interview guests every week. And yeah, this was a great one from Paul Santori, because like he's been living off covered call ETFs for the last year and kind of reflected on his year and all the learnings he's had, like in being invested in them and being retired on them. So he's like kind of actually doing it. Yeah, because he got unfortunately laid off early last year, as I understand. So, but he had his covered call ETF portfolio all built up and kind of ready to support him in this. So great to see all the lessons he's learned there. And yeah, I've been following Ryan and Ari for years now in the finance space. Like definitely learned a lot from them, like building up my more normal growth portfolio and dividend growth portfolio. So yeah, great. It's been fun following their podcast. And then also Paul, I've been kind of following since summer last year, since he started his channel. And I've kind of been keeping an eye on his stuff because he's on the Canadian side of things, right? And like I've mentioned a couple times, like I'm also helping manage my mom's retirement portfolio, which has some high yield ETFs to help generate income for her in retirement. So I'm always keeping my eye on the Canadian space of stuff. So yeah, Paul's been a great resource for that as I've been watching them on YouTube. So definitely check this video out. Worth a look, because like, yeah, Ryan and Ari approach it more from the dividend growth and kind of more traditional growth side, and Paul's more on the high yield ETF side. So good to have different perspectives on that, right? As I always say. So yeah, that's the video this week. Sorry I went a bit long. Lots to cover this week. But yeah, as usual, if you want to follow me off YouTube, there's a bunch of different ways you can do it. You can do it on Blossom Social here. You can kind of see all my portfolio, my trades that happen from day to day. You can of course follow my portfolio, my Snowball portfolio for free as well. All these links that I'm mentioning, they're all down in the description below. You can follow all these for free. Yeah, again, I'm always transparent with all my numbers, and yeah, love showing that and not hiding anything from anybody and not paywalling any of these. There's also my Patreon account that you can kind of follow. So this is completely free to join. This has like my full backlog of videos, and I post any new videos day and date as well too. And really this is just like a good backup in case there's any more shenanigans with YouTube. And then there's also a little paid tier here as well, where yeah, it's mostly to support the channel. Just think of it like a tip jar. But right now there is the early beta access to my spreadsheet, which I'm just gathering feedback from Patreon supporters right now. And then soon enough, I'll be putting that out on the Discord for free, and then also just publicly for free. So, but yeah, if you want to get in some early feedback there, that's available. And yeah, and then of course there's a Discord, like I mentioned. Yeah, we're pushing over 215 members strong, I believe now. So yeah, it's always great to just talk to people here in between videos. If anyone needs like clarifying questions, like Gohan over here, or like, yeah, dad over here has his daughter investing. He was asking like how her allocations are. I kind of ran her holdings through a spreadsheet and ran different allocation scenarios. Did that for fun last night. But yeah, great little community of people that some are living out of their brokerage, some are not. And we're just all kind of learning from each other and supporting each other in the different ways we're approaching things. And there's no right or wrong way to do stuff. Yeah, there's a lot of ways to approach things, right? So yeah, and also here you can kind of see all my trade alerts as well as usual. So you can kind of see my gold buy earlier this week, and then also GOW from Patreon earnings. So yeah, I post all that there as they happen. So yeah, that's the first portfolio update of the year. If you got some good value out of it and you're looking forward to following future ones, give me a follow on this channel, Fully Invested Fi Labs, or follow my main channel as well to get prepared for when I'm posting back on it on the 24th. And yeah, I'll catch you in the next video. I hope everyone has a great weekend, and peace.